Hey everyone, my name is Brendan McKay. I'm the broker owner of McKay Mortgage Company, and welcome to Broker Playbook. We're going to be talking today about wholesale lending. It's something that gets talked about a lot on Brokers Are Better, and with all the new brokers entering the industry, not everybody's really aware of exactly even what it means. And we're going to talk about that and why it's not recommended to work with wholesale lenders and all that jazz. So thanks for joining us. As I mentioned, my name is Brendan McKay. I'm in the DC metropolitan area, and in 2020, I closed 415 units for 180 million in volume. And I'm not just telling you that to brag, although that's part of it, but because I don't work with any wholesale lenders. Not a single one of those 415 loans was funded with a wholesale lender. All of our business is completely based on referrals, and past clients are our number one referral source. So a lot of these arguments where you're talking about, why you should work with them or shouldn't, just know that you can build extremely successful business models without working with wholesale lenders. And not only do I think it's good for the short term, but I think it's better for you for the long term. And we're going to talk about that today. First, let's start with what the definition of a wholesale lender is. So a wholesale lender, it's a mashup of wholesale and retail, the two words together. And it's basically defined as a mortgage lender that has both wholesale and retail business channels. But more importantly, it uses the retail channel to solicit borrowers that were initially obtained through the wholesale channel. So there are a lot of lenders out there that have both wholesale and retail, but there's a separation. So a wholesale lender is really one where those start to bleed together in ways that are uncomfortable. An easy way to kind of immediately see some signs of a lender that might be a wholesale lender is typically their retail operations, at least entirely or in part, are going to be more so call centers rather than brick and mortar, like locally based direct lending companies. So for example, easy examples of wholesale lenders are Quicken or Rocket Mortgage, Freedom Mortgage, PennyMac, New Res are some of the bigger ones. But there's lots of great lenders that have retail divisions but might not necessarily be considered wholesale. And a lot of them are fantastic AIME partners. Home Point Financial is a really good example. They have a retail model, but they're just like you and me. Like they're out there in the local market competing for business, going after realtors, and you might consider them competition, but they're not going to go after your borrowers after you close them. It's a very, very different thing. So they have the call center or their brick and mortar is a good defining line between the two of them. Why is it bad to work with wholesale lenders? This is on a very basic level, and we're going to get into some more in-depth stuff as well. The basic is that they're going to solicit your clients after closing. They might not do it right this moment, but they are storing that data, and they are likely to do it sometime in the future. A lot of wholesalers out there are promising that they're not going to do it. You hear it from their account reps and this and that. And I do want to comment on that a little bit because there are some companies out there that I still consider wholesalers that might be pausing on it on these practices. Although, frankly, I think a lot of them are still doing it. They're just being more sneaky about it. But the first thing is, it's really important to know that those lenders and that are putting those new policies out there, this is completely in response to all the work and all the pressure that AIME has done and all the pressure that they put on the entire wholesale channel to really clean up these business models. So I think it's important to recognize that, because if the reason that they're doing it is because of AIME, and AIME is the one that's educating all of us on what's going on, I think it's important to take a moment and think about where the root for these decisions is coming from. And then still a lot of these companies are, if they're on board with this, why aren't they on board with AIME? And it's because it's not really a long-term business practice of theirs. Furthermore, it's usually just an account rep telling you it. If it's in writing, it's on a piece of marketing material, and it's certainly nothing that's legally binding. And it might be something they're deciding to do today, but they can easily change their mind tomorrow, and they still have your client's data. And most often the promises are coming from an account rep at one of these wholesalers, and they believe it. They believe what they're telling you. They're probably not even lying, and they're just repeating what they're being told or what they're immediately seeing. But the types of things we're talking about are not happen at the account rep. These decisions are not happening at the level of the account rep. It's not happening at their manager's level either. These are big picture business decisions on what are we going to do with all this data on past closed loans and whether we're going to market to them or not. So even if the account rep's telling you that, and even if they believe it, the truth is they have no control over it whatsoever. and no way to ensure that the company is going to be held accountable to that. There's a lot of discussion and argument back and forth on this, and a lot of brokers you'll see out there defending their use of wholesale lenders. So I wanted to talk today about some of the most commonly used arguments for how they're justifying using them, and kind of my rebuttal to that and why I don't think they're really valid arguments. The first one is, this is something you see all the time. I don't really care if they try to go after my clients after closing, because I stay in front of my clients. And they're always going to come back to me. And if they don't come back to me, then I failed, and that's on me. And there's some logic to it, certainly. But the first thing I would say is that you are completely playing with fire if this is really what you're hinging yourself on, your ability to truly stay in front of your clients in a level that will let you, overtake some of these wholesalers. Let's talk about some of the companies that are doing these types of practices. By and large, they're incredible marketing companies. I mean, Quicken, I would argue, it might be the best marketing company in the entire United States. And if they're not the best, they're up there. They're really, really good at it. And you really should be properly respecting the capabilities of these companies. I mean, look at it this way. A lot of them, especially on the retail side, they are terrible at mortgages. Their rates are awful. They have a ton of points baked into there. Their process is slow. Their borrowers are frustrated. Their online reviews aren't even good. Yet these are some of the biggest lenders in the country. How is that? It's because they're amazing at marketing. They're amazing at acquiring new talents, and they have basically unlimited resources to continue doing so. So you really need to acknowledge that, and then take an honest look at yourself. I put myself in the camp of, and even I've always been a big supporter of AIME and everything they've done, but my initial reaction was this very thing. Like, I stay in front of my clients. I'm not really worried about it. I still have reasons beyond that for not using them. But, I took an honest look at myself, and I think we do a great job. And I'm never going to be able to compete with some of these companies. And the touches that I have on my past clients are always going to be of higher quality than anything these companies are going to be able to do, because of the relationship I have, the personal level I have. But despite that, I'm never going to be able to compete with the volume and the diversity of ways that they're touching these past clients. And maybe when McKay Mortgage starts doing Super Bowl ads, I will reconsider my stance on this. But we're, sadly a long way from that. So being realistic, I don't think I can compete on this playing field as far as marketing to past clients with a lot of these companies. And really, to steal a line that I think sums up best, a couple of years ago at Fuse, Matt Ishbia, during his keynote, was talking about this. And he said, I don't doubt my wife's loyalty for one moment, not a single moment. She loves me, I love her. But that doesn't mean I'm going to set her up on a date with Brad Pitt. And that's really what you're doing by sending some of your clients to these companies, especially because if you're brokering it through them, they're probably going to have a great experience and assume that if they go directly through that channel in the future, it's also going to be a great experience. So you're really setting them up for it. Okay, number two. Another common rebuttal is, I have an obligation to do what's best for the client, and if what's best for them is sending their loan to a wholetailer, then so be it. And this is really a version of I need their pricing, which is something we're going to get to in a minute. But I really think that this is a very, very short-sighted approach and a transactional approach. You're really just looking at it on a hyper-transactional level and not looking at the bigger picture. In my opinion, what's best for your clients and for my clients is working with me for all of their home financing needs for the rest of their life, not just this transaction. The best way to ensure that happens is working exclusively with wholesale lenders that are true partners. Not saving them a couple $100 in closing costs on one individual loan, only to make it more likely that they might work with that lender in the future and get completely ripped off. So if you really want to look at it dollars and cents, I don't think it adds up completely. Really, but even bigger picture than that, you shouldn't just be thinking about what's best for this one individual client, but for all of your clients right now and in the future. And what's best for them, and for you to be able to touch as many clients as possible and get in front of as many clients as possible, is for your big picture business to be doing as well as possible. And I truly believe that you are going to be better set up for that kind of success by working with lenders that are true partners, not just lenders that look at you as a source of business, which I do think is also going to be a difference between lenders, wholesale lenders that are true partners and wholesale lenders that are wholesalers. Don't get me wrong, the ones that are true partners, you are absolutely a source of business to them, but you're more than just that. And you can see it in a lot of the programs that they roll out and the type of support they provide you and things like that. And I do think it's going to provide you a better platform and avenue to grow your business long term. Okay, number three rebuttal. This wholesaler has promised that they will send my clients back to me, or this wholesaler is sending their clients back to me. And touching on what we talked about earlier, how some of these wholesalers are pulling back on some of their aggressive client retention practices. It is a short-term strategy by these lenders. And like I said, it's 100% reaction to AIME, the momentum they've created and the pressure they put on the entire industry. And you should really ask yourself why they aren't AIME sponsors, as we talked about earlier, and ask for something in writing, something that's other than on a marketing flyer. These are short-term practices, and if the market ever turns and the pressure that AIME is creating is released, or if brokers stop caring, enough of us stop caring, they're going to go right back to it. And I think the more, I mean, it's like any consumer situation, you speak with your dollar, right? And if you're not giving these companies, these businesses, your business, because of their practices, they're going to continue to change. And I really do think that's the best thing to do. Number four, some of these partner lenders just sell the loan to some massive servicer that's going to solicit my client anyway. So what difference does it make? And it makes a huge difference. This is a response that treats the argument strictly as black and white. Basically, and using UWM as an example of the one everyone knows best, of a wholesale lender that doesn't have a retail channel at all, and now is servicing loans, but even before that had specific agreements where they couldn't be solicited, and being like, well, if you can't do that, then everything else is the same, and that's obviously not true. The world is full of grays, and there's a middle ground in between. So it's better to partner with a lender. I mean, is it better to partner with a lender that services the loan themselves or has those non-solicitations? Yes, of course it is. But that doesn't mean originating a loan with a lender that doesn't do that is the same as originating it with a wholesaler. Those are two completely different things. So there's, bad, good, best, right? Beyond that, there is a difference between doing a loan with a wholesaler that has massive brand name recognition and doing it with a lender that sells it to a servicing company. Because if you're looking at those two situations, a borrower getting a phone call or email or marketing material from Quicken, who they're seeing Super Bowl ads for, and Rocket Mortgage, and everywhere they look, there's an advertisement for them, and getting one from Mr. Cooper, it's a night and day difference. If you've been doing this long enough, you have had clients call you and say, what is this Mr. Cooper deal? What the hell is this? And that's the kind of reaction. One is clearly from their current lender, and the other might be a call from a 90s sitcom star. Like, it is just simply not the same. And I'm using Mr. Cooper as an example, but all of these big servicing companies, they have no brand recognition whatsoever. They're nameless. And most people don't even look at their mortgage statements, so they don't recognize the name. It doesn't mean anything to them. Furthermore, they might even have a negative opinion of these companies because they're annoyed that their loan got sold to this company in the first place, and that they had to create a whole new account and auto pay and set it up all over again, and maybe some escrows got messed up in the transfer or whatever. So like, it is truly not the same. It's not even close, frankly. Another one, and this is one that's coming up recently. Rates are so low right now. These clients, it's not like these clients are going to refinance again anytime soon anyways. And as we're, if you're watching this in the future, which you certainly are, relatively speaking, right now rates are incredibly low. They're in the twos. And is it less likely that some of these clients that we're working with right now are going to refinance again? Yeah, this might be the last loan that they ever have on that house. But these wholesalers are not thinking that small, and you shouldn't be either. They're not thinking about, or are they going to refinance again in 6 months or a year or 2 years? They're thinking about, this is somebody that's they own a home right now already, and they are going to own homes and other homes for the next 20 or 30 years. And they're looking in 10, 20, they're looking in decades as far as how they're thinking, and you should be doing the same thing either. I guess, if you're a year away from retirement, maybe you can burn the bridge like that. I have some arguments for you in the future of this presentation, but honestly, you should be thinking much, much bigger picture than that. Your competition most certainly is. I need their pricing is another this is the most common argument. You don't need their pricing. First of all, there's tons of lenders that I would classify as true partners that have amazing pricing. Many lenders go in and out. But if you have enough of a pool of true partner lenders, you're always going to be extremely sharp in pricing. I originate in the DC metropolitan area. It is as competitive as it gets because of the existence of the federal government here. Job stability is very high. Credit scores are very high. People know that they can get good terms and they shop. And despite that, we're killing it. So you just don't need their pricing from that specific wholesaler. I'm not trying to tell you pricing isn't important. I do think it's probably less important than you might think it is. But that being said, you have the resources out there. You need to learn how to work with these other lenders. You're a broker. A broker means you're independent. You need to have all the different tools in your tool belt. So learn how to work with them. They're great. Is the first couple loans that you send to these lenders going to be perfect? No. But don't send them purchases right away. That's the best advice I can give you is when you're starting out with a new lender. First of all, don't send them your whole pipeline. Start slowly. Like any relationship, you're not going to marry the person on the first date, and you shouldn't send your entire pipeline, especially a pipeline of purchases, to a brand new lender the first time you work with them. Send them a couple refinances and see how it goes, and learn their system and understand the fact that the first one's not going to go perfect, but and use good judgment with that and proceed accordingly. Okay, so the big argument, and I've gone over all the reasons that I don't think you should use wholesalers. And it really, there's two main reasons that I don't think, despite all those, that anyone should. The first is they are your competition. They truly are. I do not believe that the loan officer in your town is your competition. Yeah, you might be going after the same realtors, but there's plenty of business out there. There's plenty of realtors out there. Lord knows there are. But your real competition is these massive lenders that are on TV, that are on the radio, that when you Google wholesale mortgage broker or mortgage broker are the first ones that come back on the Google search. This is your competition. These are the companies that everybody is aware of. And I guarantee you when clients are shopping, there are who you're being shopped against. So they are absolutely your competition. The biggest reason, though, that I really landed on that I don't work with wholesalers, and I never will, is that I think that wholesale lenders are bad for American consumer and they're bad for our industry. And these are two things I care about very much. And I want to explain that a little bit further. All of the reasons I laid out, like I said, none of them are my top reason. I just think they're bad for our industry. And you can see it in a couple ways. First, look at how they operate in their retail divisions. You've all seen it. You've all had borrowers send you loan estimates from these companies. The quotes are absolutely terrible. The rates are 1/4 to 0.5% out of market, and they have 2 to 3 points on them. God forbid, even more sometimes. They're stripping American citizens of their equity, plain and simple. That client is very fortunate that they also came to you, and it's pretty clear night and day once they've done that. But a lot of consumers do not. They also have horrific service. They're slow and frustrating process in underwriting and missed closings. And it's a stain on the reputation of our industry. And you might be like, well, that's the retail division. Who cares? That it's two different, left arm, right arm. And I disagree completely. It's the same brain. By sending loans to these companies, you are supporting these practices. The profits from the wholesale division are absolutely reinvested into the retail division. And if you don't think the profits from the loans that you're sending to the wholesale division, that money isn't going directly into the marketing of the retail division, you're completely naive. And that marketing is your competition, once again. But really, that marketing, they're just going out and they're getting more clients that they're ripping off who might not think as well to be shopping it and reach out to somebody else. Look at the marketing campaigns of these companies. They're not marketing, findamortgagebroker.com. They sure as hell aren't. They're marketing to call 1-800-QUICKEN or 1-800-FREEDOM and work directly with them. So I don't support these companies because I don't find it socially or morally acceptable to do so. They're ripping off American citizens. I have a problem with that, and so should you. And people go, oh, it's consumers, consumer needs to be informed. It's their job to be informed, and I think that's bullshit. I think the American citizens should be able to trust that the number one lender in the United States isn't going to take advantage of them. You can say, the regulators should worry about it, and that's a different argument. One I might agree with. But I think it's our industry, and I think you should have some pride in your profession and your chosen industry and exert the power that you have, and don't send them business. If you care about your industry and you want the overall health of your industry to be as strong as possible, I absolutely don't think you should be working with wholesale lenders. Thank you very much for joining me. I'm Brendan McKay, McKay Mortgage Company. Brokers are better.